Imagine a system where your money isn't really yours, where every dollar you earn, every savings account you build, and even your future income is quietly measured, manipulated, and ultimately made invisible while a select few profit endlessly. What if I told you that the debt you carry was never an accident? It was deliberately engineered not just by greedy bankers, by entire governments working hand in hand to make ordinary citizens financially invisible, while ensuring that real power remains concentrated in the hands of a tiny elite. Today, we're diving deep into the secret architecture of debt. We'll uncover the hidden mechanisms that strip financial identity from the public, the historical turning points that made this possible, and how this system repeats itself even today. By the end, you'll see that what feels like normal life may actually be part of a carefully orchestrated plan that few people ever fully understand. Setting the stage, background, and key figures 132, 4 o'clock. To understand how debt can make citizens financially invisible, we need to go back hundreds of years. Historically, money was tangible. Gold, silver, coins, and later paper currency represented actual wealth. Your labor, your savings, your estate, they all had visible value. But even as early as the 17th century, visionaries and financiers realized that controlling the issuance of debt could allow institutions to control entire populations. Key figures like the Rothschild family in Europe, early central bankers in England, and later, architects of the Federal Reserve in the United States, all discovered a fundamental truth. Money is more powerful when it is abstract. The moment money shifted from something you could hold to something that existed as numbers on a ledger, debt could be used not just as a tool for trade, but as a weapon for control. Central banks were the hidden engines of this shift. They didn't just lend money, they created it from nothing through fractional reserve banking. For every dollar deposited, banks could lend out $10, $20, even $30 in theory. Here's the key. The citizen was on T creating this money, they were effectively paying for it, with interest, while remaining largely invisible in the system that actually profited from it. It's the origins, 4 o'clock to 7 o'clock. The origins of engineered debt as a control mechanism can be traced to early national loans and government bonds, nations at war struggling with infrastructure, or chasing imperial ambitions had a problem. They needed vast sums of money fast. Governments began borrowing from private banks. But here's the twist. The money they borrowed didn't exist before the loan. Banks could issue it because the system allowed them to. Citizens were asked to pay back the loans with taxes, often decades later. In effect, the debt shifted the financial reality of entire populations onto invisible ledgers numbers that existed only in accounting books, but carried enormous real-world consequences. If a citizen defaulted on a loan, their financial identity was penalized, often irreversibly. Their money wasn't just missing, their very financial visibility, their ability to participate fully in the economy was diminished. This wasn't accidental, it was engineered. Debt became a tool not just to raise money, but to quietly absorb and neutralize the financial power of the masses. The rise, 7 o'clock to 10 o'clock, the 20th century accelerated this system to a scale never seen before. After the First and Second World Wars, governments worldwide were buried in debt. But the mechanisms for creating and managing that debt had become far more sophisticated. Enter the era of global central banking and interconnected economies. Loans, bonds, and now digital money began to operate on systems invisible to the average citizen. Governments borrowed trillions, banks lent trillions, and ordinary people were drawn deeper into cycles of credit, mortgages, and personal debt. By the 1970s, with the end of the gold standard in the United States, money itself became fully abstract. Dollars weren't tied to anything tangible, they existed purely as numbers controlled by central banks. And that's when the real invisibility took hold. Not only were citizens' debts invisible to themselves, they were now invisible in the sense that they no longer had meaningful control over the money system itself. Their savings could be devalued by inflation, their wages manipulated by monetary policy, and their opportunities constrained by credit scores while the system that created the money remained untouchable and profitable. The breaking point, 10 o'clock to 13 o'clock, the global financial crisis of 2008 revealed the true scale of engineered invisibility. Banks had created trillions in synthetic debt instruments, mortgage-backed securities. derivatives, and other complex products. To the ordinary citizen, this debt was abstract, confusing, and largely invisible, but when it collapsed, the consequences were painfully real. Millions lost homes, pensions, and jobs, while financial institutions were bailed out with taxpayer money. Debt hadn't disappeared. The public simply absorbed it, while the elite remained largely shielded. This was a breaking point, not in the system, but for the citizen. It highlighted an uncomfortable truth: when debt is engineered at scale, it can render entire populations financially invisible. Their contributions fund a system they cannot fully see or control, while those who design the system remain in the shadows. Fallout and failed fixes. 2/13 o'clock, 2/16 o'clock. Governments and institutions have tried fixes, stimulus packages, debt forgiveness programs, financial education, but these efforts often fail to address the root problem, the structure itself. Debt continues to grow faster than economies. Student loans, credit cards, and mortgages bind citizens to numbers that exist independently of real wealth. Inflation, taxation, and monetary policy quietly siphon value from the public, leaving many unable to build true financial security. Each fix is often just a new layer of complexity. Citizens remain financially invisible, forced to participate in a system that records their failures but obscures the successes of the few at the top. Modern parallels to 16 o'clock to 19 o'clock. Today, the system is more digital than ever. Central bank digital currencies, cryptocurrencies controlled by institutions, and AI-driven credit scoring make financial invisibility not just abstract, it's algorithmic. Shockingly, over $300 trillion of global debt exists today, more than 3 times the world's annual economic output. The average citizen may see their paycheck, their taxes, and their mortgage, but these are just tiny ripples in a vast sea of invisible numbers, manipulated daily by financial institutions and governments. Even small policy changes, like adjusting interest rates by a fraction of a percent, can make or break livelihoods, while the people who design these changes remain almost entirely anonymous. Patterns repeat, cycles deepen, and the public continues to be the invisible engine fueling a system they rarely control or even fully understand. 3 clear takeaways. 2/19 o'clock to 2030. Debt was engineered as a tool of invisibility, not just a financial obligation, but a mechanism that limits the economic visibility and power of ordinary citizens. The system rewards abstraction. Numbers and digital money allow elites to profit, while the public remains largely powerless, contributing without fully seeing the consequences. History repeats itself. By Barbora, from gold-backed loans to modern digital finance, the patterns are consistent. Engineered debt consolidates power, while citizens carry the burden invisibly. Warning, open-ended thought, 2032, 2130. If you think this is just history or abstract theory, consider this. Every policy, every new credit tool, and every digital currency you interact with today is part of the same centuries-long experiment. The question isn't just whether debt exists whether you remain visible within the system. Or whether your financial life is quietly absorbed into a machine designed to enrich others. What happens if this invisibility becomes total, where even your digital footprint in finance is controlled and manipulated without recourse? Call to action. 2132, 22 o'clock. If this revelation changed the way you think about money, debt, and power, share this video, subscribe, and hit the bell. Understanding the system is the first step toward reclaiming visibility and real financial agency in a world designed to make us invisible.